if you just strip out all the noise of the economy and you just focus on Bitcoin, I think that Bitcoin is going to have a very big year. I think that, it could easily double from here this year with all the tailwinds that I've been talking about. I've been saying $180,000 in the fall of 2025 for a while now, and I think that that's still very much in play. Bitcoin is explosive. The one thing that you have to understand is if you're trading around this, please have your core position. Don't play with the core position because you could easily miss out. This could easily just outrun everything very quickly.
Welcome back to The Culture Bit. Today I'm joined by James Lavish, former hedge fund manager and co-managing partner at the Bitcoin Opportunity Fund. He brings deep expertise in macro and institutional finance. In today's episode, we break down the state of the U.S. economy, the real game behind institutional Bitcoin adoption, and what a U.S. Bitcoin reserve could mean for the future. James will be speaking at Bitcoin 2025 this May, so make sure to grab your tickets with the code BM10 for 10% off at checkout. Link is down in the description below. Now to the show. Awesome. Well, James, welcome to the Culture Bit. Super excited to have you on the show this morning. I know you've been, quite a key figure just in the entire ecosystem as a whole, as it pertains to talking about just the economics of Bitcoin. And that sort of thing. I think for anybody who is new to the space, who may not know you, I just want to briefly start with your background. I know you spent years in traditional finance, managing hedge funds, navigating institutional capital. You've seen firsthand how the traditional financial system actually works. So I want to understand your background and then want to get into, what was the moment that kind of flipped the switch for you on Bitcoin?
Yeah, of course. Well, thanks for having me, Alan. It's great to be here. And it's kind of funny to hear you say that I've been a pivotal figure in the space because I feel like I got into it so late. And that is, part of the reason for that is I was an institutional investor for so many years. And so being, like you said, hedge funds, private equity, a lot of I did a lot of arbitrage in my early investing, trading arbitrage, starting on the floor of the New York Stock Exchange, trading something called ADR arbitrage, which is just foreign securities against U.S. securities. And so, I come from that institutional mindset, and it's pretty hardened mindset and reluctant to really think about anything else that could be of value than the stuff that we were working with. And so I'd heard of Bitcoin in 2015 and 2017, and I just kind of ignored it. And in 2019, this is the funny thing, Alan, it's 2019, and some of the listeners have heard this story before, but for those who haven't, I had some discretionary capital. I was like, I want to go a little bit out on the risk curve. I want to find something that would be, uncorrelated to the other stuff I had. I had private investments. I had, public investments, my IRA and all that stuff. I thought there's something to this Bitcoin thing. My wife had heard about it on a podcast with Tim Ferriss, and she can't remember who it was that he was talking to. It was probably one of the main figures in the space, maybe Thiel or something. But she had mentioned it to me years before, and I just kind of ignored it. I was like, I'll do the investing. She's an author. You keep writing books, and it's the stupidest thing I'd ever done is not listen. But I went around. It's 2019 now, and I wanted to do something, and I started asking the professionals, the people I knew that were the experts in technology, because it was a new technology. And by and large, right across the board, every single one of them just dismissed it. They said, "Oh, it's total speculation. It's it doesn't have any underlying value. It's likely just a Ponzi scheme, and it'll go to zero someday. Don't put your money in that." So I didn't, and so it was like $3,500 at the time. Moment of peace for that. Just a moment of silence for that bad decision.
No,
but yeah, it was the worst. It was the worst investing decision I'd ever made. Meaning, I didn't do my own research. And that was the problem there. And I was listening to the so-called experts who were in my field, who were in my world, that I trusted on other things, but this was something completely new. And so, unfortunately, I trusted them again. I didn't do my own research and I missed it. Now, flash forward into 2020 and we have the lockdowns and we have the massive money printing, and suddenly Bitcoin is taking off again. And I thought, well, wait, there is something to this. I got to do my own research. And so then I started doing things like this. I'd listen to these podcasts. I'd listen to Michael Saylor and Preston Pish and, all of the, Peter McCormick, and just started listening to the real experts in this space who truly understood what Bitcoin was and how it was such a strong store of value and something completely different than anything we'd ever seen, solving the Byzantine general's problem, that kind of thing. And then I was listening to a podcast with Pomp, and he was talking to Jeff Booth. And this is the moment. This is kind of the seminal moment for me, because I had bought a bunch of other things, actually, let's rewind a little bit. What had happened is I was leaving my hedge fund, and my son, who was at Cornell at the time, he was surrounded by a bunch of really smart guys in the engineering and computer engineering kind of space, and that department. And he told me, he's like, "Hey, look, we're trading on this crypto stuff like daily. I think there's something here for you if you wanted to focus on this as your next path in your career in investing." I thought, well, yeah, I'll check it out. And so I bought all the hit players, the Solana and Cardanos and ETH and a little bit of Bitcoin. And then it took me about maybe 3 to 4 weeks of really digging in to realize that all the other stuff I had was either garbage or I just didn't understand. And so I transferred all of that capital into Bitcoin and really started focusing on Bitcoin and listening to those podcasts. Now get back to where we were. My money's in Bitcoin, and I'm kind of feeling like this is the path, but there's just something missing. I'm like, there's just something that I'm not putting together to get my full faith in it. And then Jeff Booth is talking to Pomp, and he's explaining this, this battle between inflationary pressures of the Fed and central banking and the Treasury and deficits and all that versus the deflationary pressures of technology and technological advances, which should, lower the price of everything and give you abundance. And these are clashing, and they're about to just really clash hard. And then we see it in 2020, March of 2020. We had seen that. So now I think back to March of 2020, I was like, that's it. That's where Bitcoin is the key, is that it gives us a path out of this madness of the fiat system. Now, remember, Alan, I come from the institutional space. So my attitude was, well, the fiat system works because it worked for me, worked for all my colleagues and friends. So it works. No, it doesn't work. It's completely broken. And it finally opened my mind to, oh my God, this is something I've got to be focused on. This is where I want to put my energy, in this space and on Bitcoin specifically for the foreseeable future.
Yeah, I appreciate all the background there. It's certainly, I think it's a very common story of entry that a lot of Bitcoiners have, where, the common themes there are, you recognize something's not going right with the current system.
Right.
Somebody has spoken to you about it and you dismiss it at first. You're like, oh, what is this fake magic internet money? Like, to your point, you're like, the fiat system has worked. It's worked for hundreds of years. The US is the superpower in the global economy. Everybody trades on the dollar. Like, who are these crazy guys with JPEGs on Twitter talking about laser eyes?
Exactly. Yeah. That, you had the Bored Apes going. It's like, I just didn't understand what was going on, so.
Well, and it doesn't help that, Bitcoin and crypto, the delineation between the both isn't necessarily clear at the get-go. You just get thrust into it because there's no courses in college, there's no education programs. Like, all of this is being figured out in real time.
Exactly.
And so the reason why I wanted to ask about your background, right, is I think it's a story that commonly resonates with a lot of people who are new to the space or have been in the space. I think everybody has that story of like, hey, dismissed it, started messing around with the alts, got burned, really started doubling down and trying to understand Bitcoin. And then it totally shatters your framework as to like how the financial system is working. Right.
Exactly.
And, fast forward to right now, 2025, it's like we've been through COVID, we've had massive inflation. We're seeing what the Doge Commission is uncovering right now, with tons of misallocation of spending. We're continuing to see the widening of the wealth gap as a whole. We know institutions now are front running retail on Bitcoin in general. And I don't think the retail sentiment, outside of like the Bitcoin echo chambers is really caught up to what Bitcoin is. And again, that just means that the education gap is widening for those who are just not paying attention to daily financial needs. And for most people, their day to day, they're worried about their kids. They're worried about, how do I put gas in the tank? How do I put food on the table? Right. So it's like, you can't always expect everyone to be as passionate as we are, but it's an important conversation to have. And then on top of that, right, we have heads of state like Javier Milei, who recently got involved with the Libra token. And we're seeing a head of state rug pull, not only his entire people, but the entire world. While simultaneously, Bitcoin continues to become a mainstream, topic of conversation in financial circles, right? With things like the Strategic Bitcoin Reserve, Abu Dhabi buying en masse the Bitcoin ETFs, right? Huge contrast. And so it leaves people very, very confused, who are trying to figure out the difference between Bitcoin and crypto. And a lot of people are just kind of shutting their minds off. So there's definitely a disconnect there as to where institutional money is going and where the general public understands. And so that's really what I kind of want to unpack with you today as a whole. I think maybe starting from first principles before focusing too much in on
that's
Bitcoin.
A lot to unpack.
Yeah, certainly. I was recently listening to your interview with Anthony Pompliano that came out earlier this year. And one thing that struck me that I think might set the groundwork for this conversation really well is the idea that there are essentially two economies playing out in parallel right now. There's one economy that is for people with assets. They're making money. They're taking advantage of the, inflation that's going on. And then we have people who don't have assets that are just living day to day on the wages that are coming in. And as you mentioned in that interview, wages aren't necessarily keeping up with asset increases. They're actually the last thing to catch up with everything. So they're constantly playing this lagging game. Walk us through a little bit more in depth of this idea of these two economies and how that's going to play in overall to this conversation of Bitcoin.
Yeah, of course. So, I mean, there's a lot of confusion out there. You see economists who have PhDs who are saying the economy is great. I don't know what everybody's complaining about. Inflation's low. It's wages are rising and it's just cooking along. How can anybody be upset? Well, why would we have a referendum on this last administration about inflation, the problems and the frustrations and the challenges that so many people are feeling and are facing? And so where does that come from? And that's it. You just hit on it. That's the confusion is that you've got kind of two economies going here. And so much of it has been fiscally driven from these deficits and the money printing that we had back in 2021, 2022, or 2020 to 2022, where the Fed, stepped in. They teamed up the Treasury and they expanded the Fed's balance sheet by $5 trillion. I mean, they basically doubled it. And so, you go from, and then that's the issue right there. And what do? They go into the markets and they buy treasuries, they buy, some mortgage backs and other things. And it basically injects capital into the economy. So, but that really causes a lot of asset inflation. The consumer inflation was caused clearly by we had bottlenecks and some issues because of all the lockdowns, but we also issued checks directly to consumers and they spent that money, and that was a lot of money. So that was part of it. But then the wages just lagged and lagged and lagged, and now there's kind of two issues going on. First, you've got the CPI number, and the consumer indexes that they use to measure inflation, they're flawed at best, problematic. They don't really clearly capture what's going on. I mean, if you tell me that my insurance went down this last period, you've got to be kidding me. I mean, I was scrambling to reinsure my kids' cars, to have them reinsured, because it had doubled in just this last period. And we're talking thousands and thousands and thousands of dollars. This is just insane. And they both have perfect track records for driving. This is just, they just decide to raise. Some of that happens, period to period with insurance companies. That's how they do it. But the reality is, if you look back over the number of years, over the last 3, 4, 5 years, that number has risen dramatically, even though we had changed providers. So that's just one instance. You've got health insurance costs. You've got the cost of auto insurance. You've got which we just talked about. You've got cost of maintenance, auto maintenance. Like, all these things are just rising, and they're not rising at 3%. That's just absurd. That's part of the issues, that measure is flawed, and everybody knows it and they feel it, right? So and the wages, therefore, they say the wages are keeping up. They're not really keeping up for the average person. Okay, so that's one issue. The second issue is that you've got all of this demographic, this top demographic that has assets. They own assets, and they have benefited from all of that money printing and the asset inflation. And so, you go around and you hear all the boomers. Well, the boomers own most of the assets, right? They're older generation, and they own houses. They have stocks and IRAs and 401ks, and they're sitting on these portfolios of assets. And as those assets rise, then they have a bigger pool of discretionary capital to draw from, because they're making interest on that even if they just have it in the treasuries and T-bills in money markets. They were making 4 to 5% on those assets every year. And so they're traveling, they're going out to dinners, they're buying things, they're buying cars, they're buying houses, and so you have this asset inflation that's occurring because of and that is one part. And then they're out there just spending money, and that's causing consumer inflation. And so it's just kind of these two economies that are going on. And so it's unclear going forward exactly where this economy is going. So now you're seeing that the last couple of inflation prints we've had, even with their flawed measure, the inflation is ticking back up. And so why is that? Well, we had policy errors. We printed too much money. We lowered interest rates all the way back down. We went right back to ZIRP. And then we had to raise them really quickly to try to, battle that. So meaning the Fed. The Fed has two mandates. They have the mandate to have stable prices, which is really what they call 2% target inflation. We can get into the nuances of that, but there's no reason to have 2% inflation, but that's what their target is, and that's what they're using. Okay, that's one. The second thing is their second mandate is to have full employment. There's no real measure for that, but they just look at it on a quarter by quarter basis, and where the economy is and whether they feel like it's full employment or not. Well, full employment we saw was under 4% unemployment this last cycle. Now it's ticking back up. So, but one of the issues here, Alan, is that as they raised interest rates, it didn't work. Inflation did come down. It did eventually come down. Part of that was because they stopped QE, quantitative easing, where they were out there and buying all these things, and started doing QT, where they were selling treasuries into the market, taking capital out of the market, the open market. And so, you have, but remember, you have these boomers, and you have this demographic, this wealthy demographic owning assets, who were making all that interest on that all the way along. So we're seeing this thing where the inflation spiked. It's come back down. It's kind of stabilized. It's stuck at that 3 that 3 to 4% area, and it's ticking back up. If you look at it and you take that chart of where inflation has gone in this last cycle versus where it was in the 70s to 80s, it tracks it almost perfectly. You've seen this chart. Many people on this who are listening to this podcast have seen it, and it's tracking it perfectly. And it looks like it's going to swing back up. So the Fed is like, well, we're not going to lower rates again. We're just going to wait, pause right here. Let's see where everything goes. And so now everybody's on pins and needles to understand whether inflation is going up and the economy is not expanding, it's contracting, and we get into a period of stagflation, which is the worst possible scenario that the Fed could get us into. And that's what people are a little bit concerned of today.
So maybe to put some numbers to what James, you just described here for the two economies. So, and correct me if I'm wrong. I pulled these numbers from the internet, yeah. So please fact check me. The top 1%, since COVID, we've printed $5 trillion. In that time, the top 1% has gained $16 trillion worth of wealth, right, where the bottom 50% combined only saw about $2 trillion gained.
1.8 trillion to share amongst all of them. Yeah.
Which is insane. That is insane. I don't think people understand the orders of magnitude between 16 trillion and 2 trillion, right?
Well, that's 16 trillion and 2 trillion, but then the percentage for the top 1% versus the bottom 50 all combined. It's just mind-boggling. It's a massive amount. Yeah.
Absolutely.
And that's what it was 30 so the top 1% went into that period with $30.4 trillion of assets and came out with right now with almost 46.7 trillion. And the bottom 50% had 2 trillion. Now they have 3.8. So what you'll hear economists, PhD economists say, well, the bottom 50%, their assets have doubled. They're doing great. Yeah, they're not doing great. It's absurd. Yeah.
No. And you see the continued CPI. I think the CPI numbers are like 3.5%. I mean, that's just obviously just not true. I mean, people are really feeling it in their pockets. And so this top 1%, as you kind of mentioned, largely comprises of a lot of, we'll say boomer wealth. We know they're spending money, but I don't think we've really seen them liquidate, large portions of that wealth. And so we know that's inevitably coming, right? This generation owns, an outsized portion of stocks, bonds, real estate. If they start liquidating, does that introduce a new layer of systemic risk, and what happens?
Well, that's a good question. There's no reason for them to liquidate. We all know that the central banks have put us in a terrible position, meaning that you have to own assets to keep up with the inflation, meaning that you have to take risk. You can't just go and work, make money, store it in a vault, and have it available to you in the future. If you do that in 10 years, it's worth half of what it was when you made it. It's mind-boggling. It's absolutely insane. So the reality is that we're forced to go take risk in the markets, whether it's in the real estate market, an illiquid market, where there's massive fees and maintenance costs for that stuff, or in the stock market, where there's operational risk, there's execution risk, there's single name risk, there's, even with ETFs, there's some risks, so you're forced to do that. But the boomer generation, let's just call them the older generation, the asset owners, inherently understand that. It's not just boomers, obviously. It's Gen Xers and others. But they inherently understand this. They know that they've got to stay on that risk curve and they've ridden out periods. So they're apt to just ride out periods of instability or drawdowns. That's number one. The big thing is when, that older generation, starts to pass away and pass those assets to the next generation, whether millennials or lower. And so those millennials, that's the question. What are they going to do with these assets? And how much they have to pay in taxes on those, on all of those assets that they inherit, right? So that's the question. We don't know exactly where that will be in the next 4 to 8 years, but do they sell them off? And I think that just happens gradually. I don't think there's just one big moment where I don't think that systemic risk really, Alan, in my experience, comes from a shock to the market of something that people just didn't expect, something completely unexpected, or that they ignored, kind of like the great financial crisis, where it wasn't unexpected that this could be a risk, but they just ignored it because, well, the housing always increases. Housing prices always increase over time. How could there possibly be systemic risk there? Well, it turns out there can be if you leverage the system to the absolute hilt, which we've seen. So I think that that's less of an issue. More of the issue of systemic risk comes from our federal, our treasury, our bonds, our government bonds. That to me is where the systemic risk really lies, at that sovereign level, because it all got kicked up, right? So all that risk in the great financial crisis got kicked from the banks up to the sovereign level, and now that's where it is. And so the question is, will there be some sort of market shock that causes the markets to not want to own these treasuries? And if that's the case, that's the one that worries me. Now, do I think that's going to happen in the next 5 to 10 years? It's possible. I don't think so, but there are problems there, and we are in a situation called the debt spiral that has to be addressed. And the way that they're addressing it right now is through quantitative easing, whether it's through special programs or like BTFP. But we can talk about all of this, but there has to be money printing to keep up with it all.
Yeah, and I think for the general audience out there, I think the theme that I'm trying to get at here is that the dollar is continuing to debase, right? And so even within these two economies, right, we know that the top 1% that is amassing all the wealth, they know they're not holding it in dollars, right? Mm-hmm. They're playing the game, whether it's stocks, bonds, real estate. A lot are starting to realize that maybe Bitcoin is the solution to a lot of this. And then on the flip side, the general 50% of the population is also recognizing that, like, hey, some are wising up to the same conclusion that, hey, I need to play this game. Maybe Bitcoin is that asset to run to. But at a grand scale, right, we're continuing to run these $1 trillion deficits indefinitely. I want to start talking a little bit about, the coexistence of the US dollar and Bitcoin. I know, Senator Lummis earlier last year, proposed the Bitcoin Act, which has led to the Strategic Bitcoin Reserve. Mm-hmm. The current Trump administration has also been very vocal about integrating Bitcoin, whether it's, a broader asset reserve or even the sovereign wealth fund in and of itself that Howard Lutnick has been talking about. Do you see a world where the United States dollar and Bitcoin can kind of coexist? Or does this embrace of Bitcoin from, the government and institutions alike begin to weaken the dollar and create a stronger, Bitcoin narrative?
Yeah, no, I think that they can coexist, and that Cynthia Lummis understands this. The issue here is that we have so much debt. How are we ever going to get out of this hole, this problem? And most people don't even talk about it. We have unpaid liabilities that reach into the hundreds of trillions. So you got $36.5 trillion of public debt, but then on top of it, you've got all these unpaid liabilities of Social Security, Medicare, Medicaid. Now, let's take a step back. You've got the Doge Commission that's out there that's cutting expenses, and people say, some of the listeners might be saying, but what if we get into we get out of deficit and we actually are making money at the sovereign level, at the U.S. government is actually making money. And so the issue is that our deficit is so big, right, that it's over $2 trillion. If you look at the first quarter of 2025, remember the U.S. fiscal starts in October 1, so our first quarter just ended. We ran a $711 billion deficit. Well, do the math on that, right? That's a $2.8 trillion annual deficit. It was I think it was 35%, no, 39% higher than the first quarter deficit of 2024. So anybody wants to say like, well, yeah, but you've got your tax payments that come in April, so it's not really yeah. But if you look apples to apples for the prior year, which we ran a $2.1 trillion deficit, we're up over 35%, near 40% higher. Then you've got the Doge Commission that comes in, and they've saved, if you look at the debt clock, I guess it's saying that we've saved somewhere about $100 billion so far. And so, okay, that's great. How much can we really save? Number one. And then number two, how much fraud is there on this unpaid liability side that we're starting to see that we're paying Social Security to people who are 200 years old or something insane. I don't know if that's just clerical error or what's going on there. Where are those payments going? Well, we got to figure that out. Obviously, that is an issue. So maybe that $200 trillion number is $215 trillion number is lower, but it's still, they're not going to get it down to zero. So structurally, we have a problem, and that problem is that if you look at the debt, just really quickly, just big round numbers, we have mandatory expenses that are over $4 trillion. You've got defense that's $900 billion, almost a trillion dollars. You get net interest, the interest on our debt, which is $1 trillion, and which brings our total mandatory spending. This is stuff that's either in legislation or, you're not going to not pay, which is defense and interest on your own debt. You're not going to default on your debt. And then you've got discretionary spending of over $1 trillion. So even if Doge cut all that discretionary spending down to zero, they somehow got Social Security, Medicare, and Medicaid down because of, massive, just leakage there and irresponsibility on the way they spend the money. And it's not specifically the dollars that are going to the recipients, but it's the administration. Even if they got that down, you'd have to get $1 trillion out of that, because you can't pull down an interest expense. It's highly unlikely that we're going to cut our defense down in half. But even if you did that, you still have to get $500 billion out of your mandatory expenses. So where is it really going to come from? That's the question. So for us to get into surplus, that's super unlikely. I mean, I'd love it. I'd love to see it, but I don't think it's going to happen. So that's just the setup, right? So we're likely not getting into surplus. So we still have this $36.5 trillion of debt we've got to deal with. And how are you going to deal with that? Well, this is where the Bitcoin Reserve Act comes in. So Senator Lummis from Wyoming, her idea is, look, why don't we buy 1 million Bitcoin over 5 years? And over time, if you look at the performance of Bitcoin and how it is retaining its value against the debasement of all other currencies, then that reserve will enable us to pay down a very large portion of the debt in the future, or back treasuries with it, which will stabilize the treasury, and that ends up stabilizing the U.S. dollar, right? Because the biggest issue that we have right now, which has been growing over the last number of years, is that we're seeing sovereigns reluctant to own treasuries, to hold treasuries. Now, everybody around the world needs dollars, right? We're on the U.S. dollar is it's the reserve currency of the world. The U.S. Treasury is the reserve asset of the world. But we made some, key mistakes in this last administration, like cutting off Russia from SWIFT and seizing their assets, including treasuries. This just signaled the world that, well, you don't want to be holding treasuries unless you're a very, very good ally of the U.S., because they could just seize them from you. So we got to find something else to buy. So they've been buying gold. That you've seen that. A lot of them have been buying gold, and they've been buying Bitcoin. And so they know that it will hold its value over a long period of time against the dollar. So the previous thinking was, if you hold treasuries, you'll make an interest rate that'll that'll give you at least a neutral return, if not a positive real return on that debasement, meaning the inflation is going up. You need to make more interest on your bonds to keep up with that inflation. But do we want to hold those now if they can be seized from us? That's an issue for all the BRICS countries. And so that's why you're hearing them talk about, they're not trying to, create a new currency for them. They just want to be able to get away from the treasury. That's the issue. They know that they're still going to need dollars. So that's the whole point. The Bitcoin and the strategic reserve then starts this game theory where all of these sovereigns have to, they have to consider, what if the U.S. owns 5% of the Bitcoin, total Bitcoin float, and we own none? That's a problem. So now you're seeing countries step in and start putting Bitcoin on their balance sheets because of this, because they know that this could be a big problem if we don't, if we don't own Bitcoin ourselves.
Absolutely, yeah. And just to echo one of the points you brought up, it's been a lot of undue pressure on Congress and just the U.S. government as a whole, seeing BRICS try to get away from the U.S. dollar system as a whole. I think a really important note that you brought up there is not that they're trying to create their own currency, but that, the sanctions that we've recently imposed on Russia because of the war in Ukraine and seizing their treasury bills has showed the downsides of a trust-based system, whereas Bitcoin offers that trustless-based system. And so I know while some of these bigger countries that are part of the BRICS Pact, right, Brazil, Russia, India, South Africa, China, right, haven't outright said that they're holding Bitcoin. We know that like Russia has mentioned that they're mining it. We know China has reversed the mining ban stance and have actually started to introduce some of their own versions of strategy over there as well. I think very recently there is a company in Hong Kong that said that they're going to start adopting the strategy. I'm very tempted to always say MicroStrategy. hasn't fully clicked yet. But like we're seeing this play out in action, from the government level to institutions. Like people are very open and receptive to this. And so the U.S. is definitely in a precarious situation where, we live in a democracy, we live in a republic where everything has to be voted on and talked about publicly. And so we're talking about the strategic reserve. And I don't necessarily know what mechanisms are in place for us to quietly accumulate in the back, because the game theory would suggest that we need to do that.
Exactly.
Or
so we're running not sell what we already have, right?
Exactly. And that places us in a kind of the situation where, Russia, India, China could front run us. We're certainly seeing countries, obviously, like El Salvador is, the golden child in the Bitcoin community that first adopted, not only a Bitcoin standard, but nationalized Bitcoin as, one of the reserve currencies. And then in addition to that, more recently, right, we've seen Abu Dhabi start integrating the BlackRock ETFs into their sovereign wealth fund. Right. So there's certainly a lot of positive momentum for integrating Bitcoin at the national and sovereign level. I guess the question really does remain, right? Like, if we do get a larger sovereign stacking Bitcoin, does that force the U.S. to act faster? And what mechanisms are in place to allow that to happen, right? There's obviously congressional approval that could happen, but maybe perhaps there's some executive order. And if we go the executive order route, does that legislation stick?
Yeah, that's a great question, Alan. And, there are two paths, like you just said. Cynthia Lummis, she has the Bitcoin Act, and that would be the Bitcoin Strategic Reserve that we talked about, the million Bitcoin over 5 years, 200,000 Bitcoin a year. That would be the first. That's one that we've heard of. Also, we've heard since Trump was elected, people rumbling or talking about possibly an executive order. So what would that look like? Well, through the Gold Reserve Act of 1934, it's possible that you could that he could use the exchange stabilization fund in order to buy Bitcoin. Now, there's some differences here, though. So he did it through executive order. That executive order could be overturned by the next administration pretty quickly, I would think. So that's one thing. So it's not really as powerful, but it's quicker. He could do it overnight and start accumulating Bitcoin immediately, And so what does that look like? Well, there's $200 billion in that fund. But that's not all available for Bitcoin. There might be 40, 50 or 60 billion available, maybe as much as half of it. But you're talking about, it's still a lot of Bitcoin, $40 billion. And let's say that they pass it and Bitcoin runs. I mean, it's not going to be at 120,000, that would mean that we're probably only buying 250,000 Bitcoin instead of 1 million. But we would be buying it quickly, maybe half a million Bitcoin, but likely not. If he announced that order, that Bitcoin's going to, it's going to run pretty quickly because of what you just said. Everybody and their, sister and brother are going to be out there buying it, not just other nations. And so, you'll see a supply shock. The big thing is not so many people out there buying. It would be a lot. It would be the other half of it is people be reluctant to sell. Like I'm not, if the government's gonna be out there buying, I'm not going to sell mine. So there would just be this liquidity issue. It would be a squeeze. And so, that's one path. I think it's pretty low likelihood because, you'd have to, there's some reasons for that. If he did that, he would be signaling to the world that he's worried about the US dollar, exchange stabilization. Like we have to stabilize our currency, that's a bad signal to the world. And that might send the wrong signal on the US dollar. So that would be worrisome. And I think he's probably reluctant to do that, even if it is something he could do. Because, he doesn't want to Trump really cares about his legacy, about how he's seen. He wants the market to be at all-time highs. I'm sure I know his family owns some Bitcoin. He wouldn't mind that. I'm sure he wants his Trump coin to be at all-time highs. He's got a huge ego, and he wants he talks about the market all the time. If he initiated the exchange stabilization fund to buy Bitcoin through an executive order, I mean, that might tip off a sell-off in the markets, in the general markets, because, oh my God, I don't want to own US dollars. Even the government knows there's a problem because of all this debt. Because all these years we've been talking about debt. We've been talking about debt for decades and how it's a problem. It's never been a problem. So when you hear traditional market analysts talk about it, they're like, we'll deal with it like we always have, no big problem. It's just debt. Debt, it creates productivity, and which part of that is right? Okay. It is true that debt creates productivity. It brings future productivity into the now, but irresponsible use of debt doesn't. And so that would tip people off to that problem. And then that means he and his cabinet would probably be reluctant to do that. I mean, what would be the point? Just to get Bitcoin to go up? I don't see that. So the second thing is congressional approval, which would be the Bitcoin Act. The issue or the challenge here is that, Senator Lummis doesn't even have a co-sponsor for the bill yet. I mean, you got to get a co-sponsor for the bill, number one. Then you've got to start putting it through committees. So it has to run this gauntlet of approval. So you got to put it through committees. Then you've got comment periods. Then you'll have negotiations on the terms. Then you'll have revisions of the terms. And even if it was passed, if it gets through all that, that gauntlet, and both houses of Congress pass it, or both branches of Congress, the Senate and Congress pass it, House of Representatives, then even if that happens, it likely doesn't look like it does today. So who knows what it would really look like. If it did get to Trump's desk, it's likely to be signed. But I think it's just going to take a while. And, do I think it's likely? I mean, at this point, I would give it even odds, but I would give it lower odds of this year happening. So these things just take so much time, and there's so many other things going on right now. The government's in a battle of survival against Doge because there's so much waste that they're uncovering. They're focused on that right now. That's really their big focus. Let's cut this waste first, then we'll figure out the other stuff later, I would think. But that's kind of my thought on it. Do I think it happens eventually? Well, game theory says it would. Um, do I think that we have ways of accumulating Bitcoin that surreptitiously without the other nations knowing it? Well, it's possible. I mean, we've seen a lot of spending that we have no idea where that money is and where it goes. Sure, it's possible we could use, some sort of NGO to do it. Um, would that be a black mark on this administration because they did exactly what they're, cracking down on? Likely. So again, that's likely. It's unlikely to happen. They would do it in the right channels, in my opinion. But it's I've lived long enough to know to not expect anything.
No, certainly, and I think you hit the nail on the head that Trump is certainly a legacy-minded individual, and so I think he's going to try and avoid any black blemishes, any sort of like 6102 attacks where they try to rehypothecate the Bitcoin in that.
Right.
I've heard a lot of theories around how they could accumulate Bitcoin in the background, and it's fun to speculate on them. But I think one more that's kind of more middle down the road that's less speculation is that our own public companies here in the U.S. Are really leading the charge with corporate Bitcoin adoption, Bitcoin integration in their corporate treasury strategies. Obviously, Strategy, formerly MicroStrategy, has been the champion of that, but we're starting to see other companies like Rumble, obviously all the public miners. We know Tesla, Semler Scientific. Tesla has held Bitcoin for a long time. We know Michael Dell is a huge advocate of Bitcoin as well. Even Microsoft, up until recently, was accepting Bitcoin in their store. I hope they reverse that sometime soon. So I say all that, even if, the federal government tends to lag, there's tons of positive momentum on the institutional side, even on the state side, which we haven't had a chance to talk too much about. I know there's tons of state bills that are currently out in terms of starting their own states' Bitcoin reserves, which could help incentivize some of that legislation in Congress. But I do want to focus here on the institutional side of stuff. So, James, I know you run the Bitcoin Opportunity Fund.
Yeah.
And so you have a ton of expertise here. I guess maybe let's start talking about, what is the Bitcoin Opportunity Fund? And then would love to hear the saga and progression of conversations with family offices and other retail investors since you guys started. Where were conversations where you guys started? And now how are those conversations shaping up, considering the fact that Bitcoin, the topic of Bitcoin, is less taboo?
Yeah, absolutely. So the Bitcoin Opportunity Fund is an investment vehicle. It's like a hedge fund that invests in the Bitcoin space, and we focus on later stage companies. We can invest in both public and private companies, and we've done both. And we focus on companies that are revenue generating. So it's kind of like we're looking for real companies with real returns. Real companies with real revenue that produce real returns. And so we will do some early stage stuff, but it's a smaller portion of the portfolio. And so that's our focus. And the co-managing partner, David Foley, and I are the ones who are running it day to day. And, when we launched this fund, Alan, it was at the depths of negative sentiment in this space. We just had FTX and Sam Bankman-Fried and Celsius all collapse and fraud. And it was just, and Bitcoin had collapsed all the way down to under 20,000. And we were out there trying to raise this fund and explain to people it's a tremendous opportunity. Meanwhile, while we're doing that, we had the last administration who was so antagonistic on the space, refused to give clear legislation or clear regulation on it, and was attacking the space through something called Choke Point 2.0. We even had investors trying to wire us money and the wires were canceled or they were returned, they were refused, they were debanked. It was pretty ugly. It was a pretty ugly moment. But we did end up cobbling together enough money, enough investors to say this is worth it for everybody. Let's go forward. Let's do this. And so since that time, we've doubled the assets. We've returned over 80% net to them in just over a year. And we're really pleased. And so now you flash forward to today, Bitcoin's hovering around 100,000. It's peaked over it before, and the conversations are completely different. It's completely different. So before, we couldn't really get any institutions or any family offices to really consider it. Now we've got family offices coming to us and saying, hey, we want to enter this space. We know we need to own Bitcoin. We own a little bit of that, or we're going to buy a little bit of that, or we've owned it, but we want more exposure into this space. And you guys invest like we do traditionally. We understand you guys have been in this space. You and David have been doing this for almost 30 years each. And you are looking at the space kind of like we do and looking to get us a better risk-adjusted return than just investing in Bitcoin alone. And that's the whole point. And so the conversations have been completely different and super encouraging. And so because of that, because we've had so many people come to us, we've decided to launch a second fund, and it'll invest just like the first fund, and they'll invest pro rata, pari passu on everything. And so according to the assets, and we've just launched it, and we're starting to take investors now. But like I said, we're focused on getting real returns for our investors. And so if you liquidate our portfolio, you get what's in your statement. We don't mark our privates up. That's a big difference between us and the VCs. We don't have any reason to mark our privates up right now. So we're leaving them at cost. And so, but that's a little bit of a distinction. What we see is a ton of opportunity in the space. We're super excited about how many opportunities we have, and exactly what you just said. We see institutions coming in and wanting to hold Bitcoin. They're wanting to hold MicroStrategy. They're looking for ways to augment their returns. And they know now, looking back on the returns of the past, decade, if you added Bitcoin to your portfolio of other investments, it would raise your Sharpe ratio undoubtedly, and which means it would raise your risk-adjusted return to your overall portfolio. Your returns would be higher, and your volatility would go up a lower amount, meaning that your risk-adjusted return would be better. So even if your volatility goes up a little bit, which is not really that much, if you have a reasonable percentage allocation to it, then your risk-adjusted returns are better, and that's a really big focal point for institutions. And now we're seeing institutions come into the space. If you look at IBIT, or if you look at the ETFs, not just IBIT, but Fidelity and Bitwise and the other ones, you've got these massive institutions coming in that you're seeing. Some of the largest holders of these ETFs are like Citadel, D.E. Shaw, Schoenfeld, Tudor. You've got State of Wisconsin's one of the largest one. Morgan Stanley's very large one. You're seeing banks come in and holding them. You're seeing banks come in and buy MicroStrategy. You're seeing massive funds that people don't even know of. Like one of the largest holders of all the ETFs is a firm. It's a hedge fund called HBK. Harlan Cornelius is an old firm. He's no longer there. It's now being run by the managing partner is Jamil Akhtar. He's a colleague of mine from the Fort Worth, Dallas Fort Worth days. But they're a massive holder. Nobody would know who they are, but they have over $20 billion of assets, and they're buying Bitcoin because they know that it will be a strong diversification in their portfolio and likely augment their returns. I haven't talked to Jamil in a while, but that's my guess. And so that's like one institution nobody would have even heard of, but it's a massive hedge fund. They're quietly, have been accumulating. And now you're hearing about banks accumulating Bitcoin. You've got, we saw I think there was another announcement this morning of bank buying. Was it the Swiss bank? You've got, and I've got to bring it up. I can't remember who were the big banks. Yeah, it was UBS. So you've been seeing big banks like UBS was announced. You've got Cantor Fitzgerald. You got Bank of Montreal. These are massive banks that are all buying MicroStrategy. Okay, so a simple question would be like, well, why are they buying MicroStrategy, not just IBIT? Well, they might be buying some IBIT, but um, there are a few reasons for this. Number one, it's likely lower risk to them as a portfolio manager, professional risk, fiduciary risk, because they're buying something that is readily traded as a stock. It's a company on the exchanges, so it's something that is not just Bitcoin. Like nobody could say, well, they're just buying Bitcoin. No, they're buying a company that has real revenues that happens to have a Bitcoin treasury. Now, we all know in the Bitcoin space that this is effectively a Bitcoin company. So that's one thing. So professional risk is lower. The second thing is MicroStrategy is in the NASDAQ. And so they know that there's some sort of support there, that if the market is buying the NASDAQ, the Qs, then they're buying a portion of MicroStrategy. It's going to correlate to the NASDAQ. So that's another thing. And the third thing is it's possible that and probable that they're looking at MicroStrategy and realizing that they have all this Bitcoin that has previously been marked on GAAP accounting, that has been marked at a material it's material impaired. It's so as an impaired asset on their sheets and marked to the lowest level it's ever been. So they've got this upcoming remark on it where MicroStrategy will have a massive return, and GAAP accounting will be very positive. There are concerns about the taxes of that, and I don't believe that should be a big concern, and that this right here tips you off to that it's likely not a big concern with all these institutions buying it. So those are all things that make it easier just to buy MicroStrategy than to just buy Bitcoin. The other thing is MicroStrategy is trading at a multiple of over 2 times its underlying Bitcoin holdings. So what do I mean by that? I mean, if you take every single convertible bond, all of the executive pay packages, all of the common shares, and you assume that everything's been converted into common, and then you take that and you look at the share price over the amount of Bitcoin that they own and the dollar value of the current dollar value of the Bitcoin they own, it's about a 2.1 ratio. So that's the multiple that they're trading at. It's about a 2.1 multiple, 2.14 today on my calculation. So they know that as Michael Saylor goes out and accumulates more Bitcoin, he owns 479,000, I believe, right now. And his target, he said, is about a million Bitcoin. So if he continues to go out and buy Bitcoin, so he issues shares and buys Bitcoin, that's accretive to his balance sheet as long as it stays. It's accretive to the Bitcoin price as long as it stays at that 2+ valuation. And what I mean by that is that if he goes and issues $100 million worth of common, he takes that $100 million and goes and buys Bitcoin with it. Well, then his stock should go up by the corresponding amount times 2. So it should go up by $200 million in order to keep that 2.1 valuation. And so they know that it's kind of a levered play in the future on Bitcoin. And then lastly, if you look at Bitcoin and Bitcoin companies, like you just said, there are a lot of companies out here trying to replicate this strategy. They do not have the balance sheet to do it like MicroStrategy does. The reason they've been able to do this so effectively in such large amounts is that, number one, they were a profitable company before. So they had earnings from their software company. So it enabled them to go and start issuing these convertible bonds. They took those convert capital and they put it into Bitcoin. And suddenly their stock started becoming very volatile in tandem with Bitcoin, right? And so that volatility was because of Bitcoin. It wasn't because of illiquidity. So then as they issued more converts, you had convertible bond traders saying, oh, this is great because not only do I have that optionality to the upside with the underlying Bitcoin where I can convert these shares profitably to where I bought them. Not only do I have that, but I've got this volatility that can trade around in between me. I can be delta trading around it. And for your listeners who don't understand what that means, that convertible arb traders, they borrow MicroStrategy stock, they sell it short in a certain ratio against that convert in order to maximize the amount that they can make on that volatility. So if it goes up, they'll short more shares. When it comes down, they'll buy them back. And then it goes up, they short more shares, and then it comes down, they buy them back. And so they can trade around it, delta hedge, and make some nice profits in between. And along the way, every single one of these convert bond holders is in profit. I haven't looked at the last one, but every single one up to the last one has been in profit handsomely. And so and they're all over the conversion. So like this is what is so important about MicroStrategy that some of these other smaller companies that are looking to do, but haven't been able to do. So to land the plane on this, as my colleague, my co-managing partner David likes to say, to land the plane on this, MicroStrategy is if it owns this much Bitcoin, it will become a Bitcoin institution, a finance company, much like JP Morgan is today, especially if we end up going to a Bitcoin standard. But they'll be able to have, with all of this Bitcoin, they'll be able to have, lending products, financial products, maybe insurance products. They'll be able to do all kinds of stuff with this Bitcoin that other companies just won't be able to do because they don't have it. And so this is Michael's vision for the future, is he'll be a Bitcoin finance company. And so that is the long-term play on this. And so, we own MicroStrategy. We've owned it, or strategy, sorry. We've owned it for a long period of time. It's been, the best performing asset in our public portfolio. And it's been our largest holding for over a year now.
Yeah, I think the most interesting thing about the entire strategy play is there really are, to what you just said, they're repositioning their entire company line from software to being the Bitcoin bank and having all these future lines of financial products down the road. One of the things that I hear, for the Bitcoiners out there that aren't necessarily, in the weeds and in the world of traditional finance, one of the big critiques I always hear of like BlackRock, some of these hedge funds, strategy is that, why aren't you just outright buying Bitcoin, right? And so that's why they all flock to MicroStrategy, now Strategy, as being like the golden child, because they're the only ones really actually buying Bitcoin. And yeah, there's others that have begun to replicate that strategy, such as Metaplanet. But I know a lot of Bitcoiners out there aren't super keen to favor the Bitcoin ETF. And, I get the one side of the conversation, right? Not your keys, not your coins. It's always, best to hold on to the actual asset itself. But from a financial side, family office side, fiduciary responsibility side, right? There's a ton of risks there that, don't allow these corporations to get the exposure that they want. So the ETF was the original catalyst for that. I guess maybe for the sake of the audience, let's backtrack a little bit and talk about some of the tailwinds that have begun this cascade of allowing companies to get into, or at least get some level of exposure to Bitcoin, right? I know we've had things like the revisions of the gap accounting. We've had the repeal of SAB 121. James, walk us through maybe some of these core things that have happened over the course of the last 4 or 5 years.
Yeah, well, this is exactly what you hit on, exactly why we're so bullish and why we have so much confidence in the space and why we're so excited for the coming years in our fund. Number one, the first one you hit on is the gap accounting, which happened in late 2022. So that was revised. The gap accounting rules changed. So now they used to be, if you were a company and you took Bitcoin and you held Bitcoin, wherever you bought it, you had to hold it at that price, or the lower of that price, or the lowest that Bitcoin traded at, and it was called an impaired asset. So if you bought Bitcoin at 50 and it went down to 20 and it went back up to 40, you had to hold it at 20 and be holding it at a $30,000 loss. And the only way you could bring it back up to 50 is if it traded back up to 50 or over and you sold it. And then you could mark it off your books as you know, a net, either a small loss or a gain, whatever. Okay. Now the new accounting says you can mark to market, which you buy it, and wherever it's trading in the market, that's where you mark it. So that was a stumbling block for companies. They're like, I don't want to buy this thing. It's so volatile. You've seen it go from 67 down to 17,000. I'm not going to buy this thing. It's crazy. So they would impair my balance sheet. Now that's been removed. So that block has been removed. That barrier has been removed. That's the first thing. The second thing was the ETFs. So we're going to go chronologically here. The ETFs launching was massive. And it's exactly what you just said. The operational issues of buying Bitcoin alone for an institution were just too high to overcome. Why? If you're a portfolio manager at an institution, whether it's an endowment or it's a pension fund, or it's a family office, and family office would be the easiest one to get over these hurdles. They're insurmountable for the others. Pension funds, insurmountable. Why? Why is that? Well, because if you're a portfolio manager and you're orange pilled and you understand it, or your analyst has orange pilled you and you guys understand you want to own it for your portfolio, you're like, I need to get an allocation that's just a couple percent, whatever it is. You have to go to your investment committee. First your chief investment officer, get them to buy in. Then you got to go to the investment committee and present it to them, get them all to buy in. Okay, so there's a big hurdle right there. Then you've got to get, even if the investment committee says, oh, we get it. Yes, Bitcoin's the future. We need to own some of this. It will augment our returns. It'll make them, even if you get them to all buy in, now you've got to go to your compliance committee. Your compliance committee, which likely would be sitting down with your general counsel, and you'd say, okay, so what exchange are you going to trade it on? And I don't understand what this Kraken thing is, and we don't really know what Coinbase, can we really tell what they're doing? Remember, this is back before the ETFs, before Coinbase was holding the Bitcoin for all these ETFs, except for Fidelity. So you go back and they're like, well, even if we trade on Coinbase or Kraken or like, what? Okay, can we really trust these exchanges? Like, okay, so you can trust them, but we don't want them to hold it. We're gonna have to hold our custody ourselves because we don't have a bank to custody. Because these institutions, they have prime brokers and prime banks to hold their capital. So if you don't have that, you're gonna hold your own keys. Who's gonna hold them? Is the portfolio manager going to have it? Is the general counsel going to have it? Are you going to share keys? Is it going to be multi-sig? Like, how's that going to work? And what kind of professional and fiduciary risk are we taking on to do that? And right there is probably a knockout, because like, if we lose the keys, we're going to lose our $10 million or $100 million investment. I don't think that that's going to work.
Can't let that happen. Yeah.
Right. So, and then, you've got other things, which is, things like where were you going to market? Do we market on New York Stock Exchange time, the Bloomberg close? Do we market at midnight? So these are all things that were complete. You had the ETFs come out, and in one fell swoop, they took care of every single one of those questions. Okay, we're going to buy it on the New York Stock Exchange. We're going to have the New York Stock Exchange open and close. It's going to be traded and it's going to be managed. That ETF is going to be managed by BlackRock or Fidelity or Bitwise or some of the others. And we know that our prime broker is going to hold it, or our custodian is going to hold it, just like everything else we have. So it's just like buying any other stock or ETF that we have in our portfolios. Very easy, very low risk professionally and fiduciary risk. Now we can go ahead and buy some and put it on the balance sheets. It's all been solved in an instant. And so that's why we've seen, we saw IBIT, BlackRock, that ETF be the fastest growing ETF in the history of ETFs, gaining over $50 billion of assets in less than a year. I mean, it blows everything else away. It's not even close, because you had institutions on the fence waiting just for something where they could buy it. Now you've got the options that are on top of it. That only augments the ability for institutions to buy this and trade around it, especially hedge funds, where they're able to manage their risk around it. They can, use put and call strategies around it now. And that's really important. So that's not just for speculation. That's for managing risk around these assets. So then last year you had SAB 121, right? And that was repealed. It went to the president's desk and he vetoed that repeal. Well, what is SAB 121? That was where the SEC was coming down on companies, banks, and specifically financial companies holding Bitcoin. They had to hold it as a liability. They were strongly discouraged from holding Bitcoin on their balance sheets. But that has recently been repealed completely. So they dropped their comments. This was SAB 121 was just ridiculous because they did an end zone run around Congress and they avoided legislation having go through the right channels. And, they basically were, it was oversight by just issuing SAB instead. And so now it's been completely repealed. And what does that mean? Why is it important? Well, it's important because the financial institutions, the banks, can now hold Bitcoin and they can structure products around it, whether it's lending products or collateral products, or whatever it can be. And that we're going to now see all these major banks. You're going to see JP Morgan and you're going to see Chase and Wells Fargo. They're all going to come in and say, well, you can buy Bitcoin right through us. You can hold it with us. We're going to have lending products around it and whatever. So that's a big deal. Okay, so that's another thing. Then we had Trump elected. And so this past administration is no longer in charge and no longer that antagonism is gone. So what I expect to have is clarity on regulation. And so instead of what we had in the last administration, which was, again, they were attacking the industry. They were, choke point 2.0 was real. We felt it. I've seen it. I know people have also felt it in other companies and some of our portfolio companies. That's gone. That's been broken up. So we no longer have that issue. And so that's a big deal. And then you've got obviously the possibility of some sort of strategic reserve or buying Bitcoin for, even if it's possible, for the sovereign fund. And so these are all tailwinds that are still, that we just started riding them this last year and into this year, that are fantastic for Bitcoin. And this is what has driven the price from in the 50s, 60s, all the way up to over 100,000 since the election. And it's been, and I don't see, even if we have massive volatility and you have a drawdown to back down into the 70s or something, which is possible. I don't think it's likely, but it's possible. Bitcoin, anything is possible. I think that would be short-lived. And so that would be an opportunity to add Bitcoin and some of the companies I've been talking about.
I appreciate that walkthrough, James. Very, very well said. I think it's fantastic context for the audience to kind of tie things all together here. I know, we've been talking a lot of things at the federal level. We've been talking about things at the institutional level. Maybe for the retail audience, drawing from your experience here, for somebody who is just dipping their toes into Bitcoin, how would you recommend a responsible allocation to Bitcoin, and maybe drawing just from some of your hedge fund experience and conversations that you've had with people that are asking similar questions?
Well, the easy thing is if you have IRA or 401k money and you can allocate to one of the ETFs, super easy. It depends on the individual. I can't give everybody the same advice. I'd say the wrong number is zero. Get off zero. But what ends up happening, Alan, is you've been doing this for a while. People start buying Bitcoin. They start reading about it. They start researching it themselves. Again, to bring this full circle to the beginning of the conversation, they start doing their own research. And once you do your own research, by and large, you end up wanting to own more Bitcoin. And so your 1% allocation will become a 3%, will become a 5%, will become a completely unreasonable percent like my portfolio. So, that's what you do. And so I would say just get off zero. The ETFs are a very easy thing to do. Hopefully you graduate to getting comfortable with buying it on an exchange, taking it off the exchange and having your own keys that you can manage, because that's the ultimate way to own Bitcoin, where you have access to it anywhere in the world. You don't have to take it with you. You just need an internet connection, and it's there waiting for you on this blockchain, that time chain that's been long established, secure, it's immutable, it's not going anywhere. You have your keys, it's your Bitcoin. And so that's the ultimate way to own it. And hopefully people graduate to that level. But if they're not comfortable with that, I do encourage them to go ahead and buy some ETF, do your research, and start understanding why you'd want to own the real thing.
Absolutely. And James, I want to be respectful of your time here. I know you're speaking at Bitcoin 2025. That's happening later this May. Short predictions. I know it seems like, 30 days in Bitcoin is almost like a year's worth of time sometimes. But, maybe where do you see things going in May? What are going to be some big topics of conversation at the conference? What are you going to be speaking on as a whole? Yeah, I'll leave it at that.
Yeah, I don't know if I'm doing a keynote or not yet, but if I am, I'll be talking about institutional adoption and the reason that institutions have to own Bitcoin, and that's what I hope to talk about in our conversations. I do think that this is going to continue. If you just strip out all the noise of the economy and you just focus on Bitcoin, I think that Bitcoin is going to have a very big year. I think that, it could easily double from here this year with all the tailwinds that I've been talking about. It's been consolidating for a while in this $90,000 to $100,000 level. And that's important. It's healthy. It's good. That means that you get all those sellers that were kind of waiting for that $100,000 level, get them out of the way. And then you're going to have a pocket there where it jumps to the next level mentally. $100,000 is a huge mental level. And it's tried to break through it a number of times now. But once it breaks through and stays through, breaks that 120 level, and then it comes back to 105, and that seems like a deal again, then that's where you really see it take off, Alan. I believe that, I've been saying $180,000 in the fall of 2025 for a while now. And I think that that's still very much in play. And Bitcoin is explosive. The one thing that you have to understand is if you're trading around this, please have your core position. Don't play with the core position, because you could easily miss out. This could easily just outrun everything very quickly. And if you look back over the years, I think it's like 10 days out of every year that Bitcoin makes its gains. And so you just can't, you have to be allocated to, you can't miss those 10 days. That's how volatile this thing is, and how explosive it is to the upside.
That's a great takeaway for the audience, James. Appreciate that. Killer conversation. I know we covered a ton of ground. Real quickly, for the audience that stuck with us this long, where can people find you? Where can people find Bitcoin Opportunity Fund?
Yeah, so I'm James Lavish on Twitter. I talk a lot about all these things, and the Bitcoin Opportunity Fund. If you're interested, and you just go to www.bitcoinopportunity.fund and just fill out the quick request, and we'll get you information on it. So
awesome. Thanks, James. Appreciate the time.
absolutely, Alan. It's great to be here, and look forward to the next time.
Same.